payments. Here we go. So why we are focusing so much on cash? Because cash is very easy to steal. And every transaction almost ultimately affecting the cash, right? Plus, whenever you receive the cash, it should be deposited in the bank as quickly as possible so that there is no motivation, there is no realization, right? There is no motive behind the fraud. You receive the cash, deposit as quickly as possible. Otherwise, you are creating an opportunity to commit fraud. So there should be two things. Those who are receiving the cash must be separate person, and those who are issuing or recording the cash, they must be different person. If I receive the cash and I am responsible for recording, then chances of fraud are higher because I may record different amount and receive different amount of cash. I may receive 4,500, but I recorded 450. The rest of the cash I took it in my pocket, right? So this is how you establish control. So point of sale, like you go to Tesco, you see that, tray opens, tray close. So how you establish control over there? So once you scan the barcode, that inventory from the stock decreases and the cash is going to be added on the point of sale side. See? So point of sale records sales, less cost of goods sold and inventory reduction. And remember, customer must be issued receipt. Whether you go to Tesco, you buy something, they issue a receipt. Whether you receive that, you take that receipt or not, whether you throw it down, but the operator over there, he must print the receipt so that it becomes permanent and it cannot be erased, right? If they didn't print this receipt, it means in their system the amounts or items are not deducted from the shelf. It means there are chances for fraud. And also, if there are two shifts, so one person must hand it the amount of cash and whatsoever. Okay, this much sales belongs to me. I'm responsible for this much until this time, and rest of the things belongs to you, your responsibilities. So see, it's like that. So at the end, accounting department must reconcile sale. They see the sales on the terminals and the person who reported the sales are equal or not. Just like that. Equal to cash on draw or whatsoever. It's like that. So cash receipts by mail. So if you receive check through mail, so you must segregate the responsibility. So those who are responsible to deposit the check into the bank, they must be separate person, and those who are recording the checks, they must be separate person. Otherwise, you are creating the chances for fraudulent activities, right? See, they deposit the check, they send the receipt to the controller, and upon the receipt of the controller from the bank, then controller will increase the cash. Increase the cash mean debit, so debit it to cash. Control over payments by checks or ETF or EFT, sorry. So that person who is responsible for transfer the fund or who is responsible to receive or to pay. So there must be a control over there. Why? Because maybe they make a fraud, maybe they need to pay 400, but he's paying 450 and asking the person credit to my account extra $50, right? How you can establish control? You must provide record. Payment system must be having some kind of receipt. Plus, if checks or any kind of electronically transferred, it must be signed by an authorized person or approved by authorized person. Plus, you must have evidence. You cannot, okay, you want to purchase the raw material. It's not like that you issue the cash first. No. Wait for material to arrive. When material is arrived in the godown, in your stock, the person who is handling the the go down or stock, he will give you notification writing the receipt. Okay, I received this much goods, so that was the order, it was signed by official. Okay, now it's time to pay, pay for this to the supplier. Everything is arranged, we receive the goods authorized by everyone, then you write it on the checks and deliver the checks.
Teacher, in the previous slides, what was the step one? Because it's like a system, but when is the step one and when is the last step?
This
Like
one,
previous slides.
this time.
Yeah, what is step number one and what is the final step?
So when you receive the check through mail, now this time has gone. Rarely we see that we are receiving checks through mail. Normally we are doing, electronically transferred, or that's right. We have Alipay, we have these kind of different activities. But in previous, like more than, like, if you see the 5 years ago, we have this kind of arrangement. So people are sending money through checks. So the person who is responsible to receive the checks, he needs to report to two authorities. One, he give the checks to treasurer. Treasurer means that authority who handles the cash. And he also notified the accounting department. I received this much check amount, and this check belongs to that customer, account number blah 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 00033, the code. And he sent that receipt to accounting department, and check he sent it to the treasurer, who is handling all the bank relationships and all the stuff. So he sent a guy and he deposited into the bank. So when you receive the check, bank will issue some receipt. We call this deposit tickets, a slip, right? And he gave it to you, treasurer, right? But bank statement can also be verified through controller. So those who can log on to the bank and see the bank account as well, right? So they can confirm from there as well, okay, the check that this person notify us and we increase our cash, whether in our bank the cash is increase or decrease. If not, then we confirm from him what happened to customer number like this and check number like this. We didn't see in our bank statement that the cash is received or not. Then he contact the treasurer. What happened to the check? Maybe the check is bounced. Bank will return the check to the treasurer, and then they will confirm that okay, this is NSF check, and then they credit the cash. So this is like a loop transfer. So the important point here is that those who are handling the cash, they must be separate from those who are recording the cash, right? Otherwise, you are creating open opportunity for fraud. Of course, everybody wants to develop this system, but this system is costly as well because you are responsible to pay treasurer salaries, accounting department salaries, controller salaries, right? So small businesses cannot afford this kind of system, but big businesses whose daily sales are in millions of dollars, so they can afford that, right? So here we go. Control over payments by check. Now, payments by check. How you issue the check, or you transfer the amount through electronically transfer the amount. First of all, for example, this is the textile company and this is the customer who issued a purchase order from a textile company. So when you receive the purchase order, you write it down the checks? No. You send the merchandise inventory details. Okay, you ordered this much, account, please confirm the order. Okay, and we have this much account of like this much amount of things and all this stuff. Okay. And then you issued an invoice. We are giving you discount or not, it's like that. So there is a whole invoice. I'm sure you are familiar with the invoice, right? And when the customer receives the invoice and click OK, goods are now transferred. So when goods are transferred, the customer will issue a receiving report. What is the receiving report? It may be the same. like you receive some UPS or the postal services. The guy handles you your postage and asks you to sign here. So that is also a receiving report. It is notified to the seller that you received the goods. Right? When you receive the goods and then payment is transferred or check is going to be delivered. Right? So why these we have to follow this step? So that the chances for fraud is going to be minimized as much as possible. Right? It's not like that you receive the purchase order and you write it down the checks. Okay. No, until the customer receives the goods, he is satisfied, he receive the receiving report and then give you the cash. So that's why the sale, we have to follow the matching principle. When sale is done on which date, you need to record the sale on that date. Cash is coming after some days, so you record the cash when cash is received, not on the when sale is happened, because when sale happen, cash is not received. So we are not going to record cash. Cash is to be recorded when cash is received. Sale is to be recorded when sale happens. So recall our matching principles. So we already talked about this control over purchase and payments. You can just stop the video and you can just read it by yourself. Okay. Now petty cash. So in big companies, petty cash, even petty cash are in thousands of dollars. Big company, first of all, sorry, what is the petty cash? It's a small fund to make minor purchases. For example, you are purchasing, water for the company, tea bags, sugar, coffee, to entertain the clients and customers, and your office supplies, right? Marker is like you need to purchase marker, pen, pencil, papers for printing, this kind of stuff. So it's a day-to-day or week-to-week activity. So company transfer the funds to a specific authorized person. We call this custodian. One person, only one person handles this cash. Because big companies, their daily routine, their daily cash expense are maybe in thousands of dollars, right? Or you need tea, so you ask your custodian, okay, this much teas are needed for our clients, or coffees, or the very nice mineral bottled water, you know. So they write it down some kind of receipts or some kind of like voucher to the custodian, and custodian after washing the voucher issue the relevant amount. If you said that 3 bottles of water are needed, one bottle is 2 yuan, so 6 yuan voucher you send it to the person, and then 6 yuan he will give to that person, and 3 bottles of water is going to be purchased, delivered to the clients. Similarly with the coffees and all the stuff. So at the end, the funds that he issued, custodian, must be equal to the voucher